So let's take a look at the mortgage program that helps you purchase a home using your Section 8 voucher. It's called the NACA HOT-PHA program. It's the Home Ownership through Public Housing Assistance, and it's a program developed by NACA for recipients that have the Housing Choice Voucher. Now, this program allows participants to become first-time home owners by combining their Section 8 voucher along with the benefits of the NACA mortgage. And we'll go deeper into what NACA offers in their mortgage program. Okay, now, with this program, participants can own their home free and clear in under 20 years. The HOT-PHA program, it overcomes the existing obstacles, providing participants with the opportunity to become homeowners on a large scale. Participants receive NACA's comprehensive pre- and post-purchase counseling, ensuring they're ready for home ownership. Now, NACA does have a very extensive program to help you know everything that's involved with purchasing and owning a home. So they have a 10-step program, and don't let that scare you because they break it down very easily. They let you know exactly what you're going to need and what you're going to do at each step. And I mean, depending on your situation, you can be home ready in a month or two, or maybe if you have some collections to clear up, it may take longer. Participants will also access NACA's Best in Mortgage program. And the greatest thing about NACA is they do not consider your credit score. Extraordinary terms without consideration of their credit score. So they look at other things. It's called character-based criteria. They look at other things besides your credit score to make sure that you're ready for home ownership, because your credit score does not tell the whole picture. Their program also offers no down payment, no closing costs, no fees, no mortgage insurance, and their interest rate is at a below market fixed rate. So the payment standard is virtually a guaranteed payment of the participant's mortgage for 15 years. So the Housing Choice Voucher is going to pay the difference between 30% of your income and the mortgage payment. Okay, and then you as the member would pay the rest, which sounds like you would only be paying 30% of your income. Even if your income were to go down, the housing choice payment would go up. So they're going to make sure that there's no risk in you losing your place at all. Your portion is going to be the same no matter whether the payment standard is paid to rent to a landlord or mortgage to a lender. Remember that. And the payment standard is for 15 years unless you're elderly or disabled, and then you can receive the payment standard for a full 30 years. Now, the payment standard is based on the number of bedrooms required and depends on the family size, the neighborhood, the zip code, things like that. NACA will pre-approve the participant for their maximum purchase price based on the Public Housing Authority approved payment standard and a 20-year or 30-year loan term. The Housing Choice Voucher payments will pay for 15 years or up to 30 years for elderly and disabled participants. Now, major lenders are involved with this program, including Bank of America has committed more than $15 billion to this NACA mortgage program. And the homeownership through public housing assistance is an exceptional program and specifically for low-income individuals and families. Participants must adhere to NACA's requirements for home buyers, which includes comprehensive counseling and full documentation underwriting. So, like I said, NACA has a 10-step to home ownership program. Most of it is just attending workshops, so you know what to expect before and after you purchase the home. We know that the participant's mortgage payment is supplemented with the Housing Choice voucher, and participants who are not disabled must work full-time as defined in the HUD guidelines. Also, while NACA mortgage does not require down payment, closing costs, mortgage insurance, or other fees, participants need minimum required funds for prepaids, such as property insurance, taxes, and mortgage interest. Also, reserves. You can get your the required funds can come from you directly, the participant, from a personal savings, or through the Family Self-Sufficiency Program, which is a HUD program. So you can look that up. All right. And also this program, the Homeownership through Public Assistance Program, can be combined with grants and assistance by the government to really increase your available properties, increase the amount of properties that are available to you. Let's put it that way. And that assistance can be used to buy down the interest rate or to reduce the principal. So let's look at what the NACA Best in Mortgage Program offers. They have really great terms. So it's down payment, none. Closing costs, paid by the lender. Fees, none. Mortgage insurance, none. Loan to value is 100% for the purchase. So that means that they're going to loan you 100% of the purchase price, meaning you do not have to have 3% or 5% of the purchase. And if you're doing a renovation or a rehab, they'll loan you 110%. Your credit score has no consideration. They do not consider your credit score. Your interest rate is below market. So right now, I believe their interest rate, let's go over here. Their interest is about where is it at? It's about 6.3%. Here we go. 6.375% on a 30-year fix, 5.875 on a 20-year fix. So right now, mortgage rates are anywhere from 7 to like 8%. So this is below market. Your term is going to be either a 20 or a 30-year term, fully amortized. You can buy down some of the interest rate. You can buy a single-family home, condo, co-op, a new construction. You can buy a renovation. And like I said, they will finance up to 110% of the cost for repairs. Your credit score, again, has no consideration of the credit score. Your payment history. So you have to have reasonable on-time payment history for the past 24 months, with the main focus on the past 12 months. So they're going to look at your payment history for the last 2 years. And you want to have a good payment history. Your mortgage payment is going to be the payment standard based on the participant's required number of bedrooms and other factors. Your payment, the participant's payment, is going to be 30% of their gross income, less allowable deductions. So if you make $1,000, I'm just taking whatever the easiest number. If you make $1,000 a month, then your 30% is going to be $300. $300 in rent. So participants, 30% of their gross income, less allowable deductions. HAP payment, mortgage payment minus the participant's payment. Debt ratio cannot exceed 43%. Basically, the money that you owe, your debts, maybe credit cards, card loan, or whatever, your monthly, what you pay per month for your bills, cannot be more than 43% of your monthly income. All right. For your minimum required funds, you should have funds for the home inspection, the reserves, and the prepaids that we mentioned before. Employment. They want you to have steady employment for the last 24 months. Unless you're retired or disabled. You might have pension coming in or Social Security coming in, which of course you can use. Income for at least the past 24 months, and it must be likely that your income will continue. Charge-offs. You don't even need to address any charge-offs. But collections should be resolved if you had them within the past 2 years, past 24 months, or they need to be on an approved plan with the collection agency. And then inspection, it must pass the HUD inspection requirements with a licensed inspector. And that is something that you must pay for, the inspection. So this program is really beneficial to all parties involved. The participants will build significant wealth through home equity, and they're able to become financially independent. The Public Housing Authority is going to save hundreds of thousands of dollars in rental payments for that participant by helping them become homeowners. And the lender is going to get a high quality mortgage issued through this program that meets all of their obligations, and the mortgage payment is virtually guaranteed by the Public Housing Authority. So everybody is winning. Well, that's a wrap for today's video. I hope you enjoyed learning how you can use your Section 8 voucher to purchase a home through the NACA program. And I hope it helps you on your journey to home ownership. Stay tuned for more exciting programs in our series. And don't forget to hit that subscribe button, leave a comment. I subscribed, and I'll be sure to respond to your comment. Thank you for watching. See you next time.